Well, I think in the essence of time, we'll get started. This webinar is going to be recorded. So in the event that we have folks that join late or want to come back, looks like Joe's gotten in now. They can circle back to the recorded version. My name is Dave Burt. For those of you who don't know me, I'm the managing director of FAI Member Services and the president of Independent Market Solutions. And I'm excited today to have the opportunity to introduce our newest partner to the IMS platform here in Florida, RentSense. I'm going to let William and Tim introduce themselves in a minute. I just wanted to kind of let everybody know that this is a program that was vetted by the FAI Member Services Board. We saw this as a great opportunity, a great avenue for our agents and their insureds. This is a renter security deposit insurance, which if any of you have kids that you're trying to put through school and you've had to go through the rental process, or if you're a landlord or a property owner that's renting property out, these guys have a great solution for both the landlord, property owners, as well as the renters, with some of the monies that they have to up front in many cases. So with that, I'm going to turn it over to Tim, allow you to introduce William, and you guys can take it from here.
Hey, thanks for joining us. I'm Tim Wall. I'm, I want to say the founder, or at least I conceptualized RentSense about 3 years ago, and we put it together and we were ready to launch, and then the pandemic hit. We thought we better pull our reins on a little bit and see what was happening with it. And everything seems to pretty much stabilize. So quite honestly, we're just out of the gate a few months ago. And my partner is Bill Wilmot. Bill is been a friend for a lot of years, and he is not in the insurance business, although he's learning quickly.
I am now.
Bill, if you want to talk a little bit about yourself.
I have about 40 plus years in the broadcasting business throughout the state of Florida. I spent my last 25 years with a Hearst ABC affiliate television station in Palm Beach. I left the business a few years ago because I was the oldest guy in the building. It was time for me to move on. And I joined in with Timmy to help build RentSense. So my background has been marketing, mostly electronic marketing and media. And we're working on this product to build its brand and make it a success.
Okay, well, we have been fortunate enough to write a couple of very, very large SaaS companies, software as a service, who cater only to property owners. And they're not in your area. Both of them are out west, and we're going to get real active with them and with what is happening in Florida. And I think there's a bill up in Tallahassee now about even mandating the use of a security deposit alternative versus a cash deposit. And I think that will help us all out. But as Dave said, this thing works for everybody. It works for the, and we'll get into the specifics, but it works for the property owner. It works for the tenant. And us guys as agents, it works for us. Because, I've been in the business for over 40 years. Started out in South Florida. And back before even fax machines. So I wanted to get away from a lot of paperwork when I developed this, and we've made it quite simple for an agent selling it, for a consumer buying it, and obviously very simple for the tenant to sign up. So I think you'll find it interesting, and it's a simple concept that I think adds a lot of value. If you have any clients that are major property owners, we can take this across the board, like Dave said, anywhere from student housing to single-family homes to apartments, military, be a great avenue for it. Even assisted living facilities and so forth, where you got to put up a big deposit to move in. So any habitational rental, we're open to writing.
I think first we're going to show.
I guess
we're going to show a short
ahead,
video, which we will,
thank you.
which eventually we will be able to adapt to a 30-second commercial that will be once budgets allow, will allow to build the brand using broadcast throughout the state and certainly focus on markets like Miami and Fort Lauderdale, Orlando, Tampa, and Jacksonville. And as you all know, the building of apartment buildings throughout the state is huge. I mean, at every corner, you're seeing developments for single-family homes and multifamily rental properties. I live in Martin County, and there's something going on in just about every corner. And you know what's going on in this whole state with real estate right now. So the building and the influx of people to this state is incredible. And we've got a shortage of housing. So it's going to develop the rental market more and more as we move forward. So this product is perfectly timed and in line with what's going on with the current economics and growth in the state.
Well, and Bill, another idea was that, let's say you have a person that graduated from Florida State, and I've got to be careful. My daughter's downstairs, and she graduated from Gainesville, from Florida. And let's say they get a job for Disney in Orlando. Great, they're going to be making good money and just out of college. So, okay, so you move to Orlando and you've got, number one, you've got most kids have student loan debt. You've got to come up with first, last security deposits. You have to buy furniture. You have to do deposits for electric and this and that. And our program, these kids might, ring the bells in every area, with the exception of not having a lot of cash to move into an apartment or a single family home. And that's where this product really would help a young person. And if you look at any of the demographics, these younger people are renting, they're not buying. Well, like Bill said, the real estate's crazy right now anyway. So it's hard for them to qualify, but even in a normal market, the millennials are, don't want to be tied down to a house, so they're renting. So with that said, if Autumn could start our little quick video, and I think this will give you a good basis of what our product's like, and then we'll go through the PowerPoint.
Introducing RentSense, property owner protection. We take the deposit out of security with Deposit Plus from RentSense. Deposit Plus is an insurance alternative to security deposits. Tenants pay 25% of 1 month's rent one time as a security deposit, while property owners receive 50% more value than a traditional cash deposit, all tenant paid. We call it rent sensibility. You'll call it valuable and sensible. Deposit Plus covers rent default and includes $500 against property damages, $300 towards utility default or eviction filing fees, and $300 for pet property damage, all within the limits of the policy. Deposit Plus generates incremental income via a setup fee per unit per year paid to the property owner. Valuable and sensible. That's rent sensibility. Renters can experience rent sensibility too with Renters Plus, our companion HO4 renters insurance policy. All standard coverages are included, plus property owners receive rental income coverage up to $1,000 per month for 3 months, and property damage liability coverage up to $1,000. A win-win for property owners and tenants. That's rent sensibility. RentSense is underwritten by an A-rated admitted insurance company backed by state guarantee associations. That's rent sensibility. RentSense, taking the deposit out of security.
I've got one comment on that. There are the state of Florida. There's some kind of hiccup in the statutes that does not allow an admitted insurance company to sell this. However, our company is based out of Jacksonville, by the way. In the state of Florida, we sell on excess and surplus lines basis. So, which is fine. And that statement that they just made that it's backed by the guarantee funds or associations, obviously with an E&S company, that doesn't hold true. So I did want to correct that. But we are admitted, I want to say, in 46 or 48 states. And again, only the state of Florida and one other I can't think of off the top of my head.
New York and Washington State, I know of.
Okay, our E&S basis. But our interesting enough, there's one of these very large companies who just wrote. They want to use the E&S company because they think that perhaps if somebody is marginal as a tenant, they can charge more, and there's more flexibility. We can increase our normal coverage without having to go through any kind of state filings. So we have two programs, one admitted, one surplus lines, same company.
This is a PowerPoint that we just prepared that would be available for you all to use if you felt the need for it. And we thought we'd just take you through this PowerPoint presentation because it is one of the more current pieces that we have.
Well, and the important thing in this first slide is we are not a bond. We are an indemnity product. It's written on a CLIP policy. If you guys are familiar, I'm sure you are. So, if you have a claim, we pay it and move on. There's no going back and trying to collect. And that kind of differentiates ourselves between anybody else. So we've got a handful of competitors, 4 or 5, but they're all bonds, and we are not. And I guess, guys, feel free, if any questions looking at this, just interject and go ahead and ask me. First says Deposit Plus, property owners 50% more protection than traditional security deposit. Our program will pay 150% of 1 month's rent. So that's where the 50% comes from. For default of rental payment, utilities, plus the pet damage. The premium is 20 in the admitted companies. Obviously, in surplus lines, you can charge more, get more coverage, whatever you need, but it's a one-time premium of 25% as long as you stay in that unit. 25% of 1 month's rent. So if your rent's $2,000 a month, our premium would be 1/4 of that, or $500. And as long as you stay in that apartment, the policy continues. If you leave that apartment, go to a different one, obviously we would need a new policy. It's all tenant paid. And what I found, and like I said, we went to several of these very large I'm gonna brain think here, expositions or trade shows, multifamily and single family homes, one in Scottsdale, one in San Diego. And we found out that these property owners spend a lot of time and money on balancing out the trust accounts. Because you have to, in most states, most all states, you have to report monthly what you've done with the money that you're holding. You can't make money on it. You can't even make interest on it. You have to leave it in a trust account or an escrow account, and you have to report it. So you have, if you have a large client that has a lot of units, your bookkeeper is spending a lot of time every month to fill out these reports and send them in. And our product eliminates that need, which obviously saves the bookkeeper time, and which is money. And when they talk about incremental money or incremental income, it's either a processing or a setup fee. These property owners have gotten very sophisticated, and they're all trying to make additional monies wherever they can. And what we normally see is a $50 setup fee or processing fee or admin fee, whatever you want to call it, that the property owner collects on top of our premium, but the property owner keeps that. It never comes to us, it never goes back, and we don't make commission on it. And it's up to them if they want to charge a fee or not. And the fee can be anything reasonable, $25, $100, whatever. It doesn't sound like a lot until you run into a client that has 50 or 100,000 units, and it's free money. So that's where the incremental income portion of this comes in, that does benefit the property owner. You guys have any questions here?
Tim, I got a couple of softballs that I'm going to throw at you that may be helpful. One, let's say, for example, I know it says tenant pays one-time premium 25% of 1 month's rent. Using an example, moved my daughter to, she was also just graduated from University of Florida, and moved her up to White Plains, New York. And she had, I think, 3 things that we had to pay, maybe 4. We had to pay a broker's fee, number 1. Never had to do that before. Had to pay first and last month's rent, as well as a security deposit. No animals. So using the example of $2,000 to the broker, $2,000 first, $2,000 second, and $2,000 for a security deposit, what would she have been eligible for had she participated, or had the building that she is residing in participated in this program?
Well, the broker fee, that's new to me as well, Dave. But that's exactly what our product does. It replaces, she would have to pay first month's rent and then the broker's fee, but our product would pay for last month's rent in case of default, and it would also pay for the security deposit, that most all of them charge for, damage or for whatever. So she would have been eligible. That $8,000 would have turned into $4,000 because of the broker fee,
Right.
plus our $500 policy fee. So instead of $8,000, she could have gotten in for $4,500.
Perfect. That's great answer. I think that'll help some folks. The other thing I wanted to throw at you was, I know the answer to this question, but I think the number of units or number of units within a building have to be, is it 25 or more?
Doesn't have to be in an individual building. We need the property owner to have at least 25 units be eligible for our program.
Okay,
And that's not etched in stone. If somebody has 20, you know, I'm sure we can work that out. But yes, the minimum we like to go for is 25 units. And again, that could be, you know, 15 duplexes. Then you got 30 units, or, you know, 25
Okay.
single family homes.
the other thing you mentioned was moving from one apartment to another. As an example, I live in the Whitehall building. I'm in a 1-bedroom, 1-bath, and I want to move within the same building to a 2-bedroom, 2-bath. I again have to write that I would have to get a new policy written, correct?
Yeah, because we don't want to use one premium to potentially buy 2 claims for 2 different units. And obviously a 2-bedroom apartment's going to cost more than 1-bedroom apartment.
Okay.
And I just saw a question pop up, how do we sell this? You saw it as a simple way to get away from administrative work, and you sell it to property owners or property managers or companies, real estate companies that do rentals. And, you know, quite honestly, with the admin fee, you're taking an expense away and replacing it with income if they charge and setup or administrative fee. Oh, you mean the application from your website?
They would go to our site, Tim. They would go to the IMS site. You can access this program through the IMS site by clicking on Florida. You'll see the information of all the carrier partners that we have. You get down to the RentSense description, and there's a hot button there to apply for this offering.
And again, gentlemen, you know, being in the business for as long as I have been in it, you know, I wanted to make it easy. You know, if you make it easy for the agents and for your prospects and for the tenants, you know, your success ratio is normally much higher. So I kind of dumbed it down to fit me.
So that question that came in about, you know, how do we do it? Again, let me be a little more clear. You would go to the IMS site, which is available through the FAI site by clicking on our Independent Market Solutions hot link. It'll take you to the Florida offerings. You go down to RentSense, and you can see the description there. You'll see an Apply Now button at the top of the screen. You would need to complete the application. There's a universal application that is used for all of our property markets, really all of our offerings on the IMS site. You would complete that. What happens is it comes back to us. We confirm that you're indeed an FAI member, and then that paperwork is forwarded on to Tim and Bill and their team to get you set up. That's the way the process works. It's very easy.
Yes, I saw another question pop up. Yes, you do sell it to property management companies. We're not going after an individual tenant, obviously, if we have a 25 unit minimum. So it can be a property owner or a property management company, or like I said, the ones we've sold have been through these software companies that do all the management and all the leases and so forth on behalf of the property owner. So yes, that's how you do sell it, is through a management firm. This Deposit Plus, we've included, and I think we're the only one that has this. We have built as a sub limit within the limit. Remember, let's go back to our $2,000 a month, where we pay 150%. So our exposure on this on a $2,000 a month rent is $3,000. That's what they're buying. Out of that $3,000, you can use up to $500 for damage to the unit, $300 for utility default or eviction filing fees that the property owner has to pay, and $300 for pet property damage. And I will say that, and I'm not, our companion product, our HO4, which is extremely inexpensive, and especially in today's market, it has an additional $1,000 of property damage built in. So if you wanted to sell both the Deposit Plus and the HO4 product, that $500 in negligent or in unit damages turns into $1,500. And also we can increase the property damage from 500 to 1,000. I don't have the number in front of me, but it was about 3.5 or 4%. So instead of 25%, you'd pay 28 or 29%, then you could double your property damage coverages built into the policy. This basically just goes through what I just said. And if you have any questions on that, it's just a graph of what I just spoke about, though.
Yeah,
They're using different rent scenarios to show how much it would save. Return to renter. Return to renter is the same product, exact same product, but it allows a property owner or management company to go to the tenant midterm in a lease and say, hey, would you like your security deposit back? We're holding $4,000 of yours. And who's going to say no, especially in today's time? So yes, I would like my security deposit back. Okay, well, you buy the policy, again, 25% or $500. We will give you back $3,500 cash in your pocket right away. And it's just called return to renter. And it's an option that it's up to the property owner to decide if they want to do it or not. I think from a tenant standpoint, I don't know who wouldn't do it to get the money back. But anyway, that's an option that we have called return to renter. And again, the same thing is the same coverages, same premium, same everything. It just, for somebody that's a month, 2 months, 6 months into their lease, it allows the property owner to give them their deposit back. Renters Plus is our HO4. It's a broad form coverage. It's not all risk, but broad form. It does provide the property owner some rental loss of rents coverage and the property damage that I mentioned. And of course, this coverage up to $100,000. That's their liability limit. You see more and more these property owners mandating that if you rent an apartment from me, you have to have an HO4, and you have to have general liability and name us as an additional insured. So on our HO4, we kind of cover all the bases, along with giving the property owner another $1,000 in property damage to the unit by the tenant. Alfred, yes, I see your question. Yes. What we like to do though is do one proprietor. So if you have a property management company that manages 5 different portfolios, what we do is this is set up, and a big thing I missed on a master policy. So if you have a property owner, we set up one policy. The policy is free. We give it to them for free. It's funded by the signups of the tenants. But we don't want a property management we don't think a property management company, because of some of the coverages built in, need to combine different entities together on a single master policy on non-related property owners. And you can see some of the coverages on the HO4. It's the, you guys are all seasoned insurance agents. I don't need to try to bore you with that. But the big couple of big thing is, you know, you have bed bug and biohazard stuff, and you know, which you'll see. And pet property damage, which you'll a lot of times you'll see excluded on an HO4. Our technology, we have the availability to connect a large property owner directly with the insurance company. I always forget the acronym for it. Do you remember, Bill?
No, I do not.
What?
No, I don't.
Not a secure file transfer. What's the other one I'm looking for? Anyway, I'll think of it in a second. It allows, and we've done this twice already, it allows them to do everything from reporting of business, cancellations, claims, everything directly with the company. Obviously, we get a copy of it, but it eliminates the need to go through us and hooks you up directly with the insurance company. And like it says, it insurance company tells me they handle claims within 1 week. You know, I'm sorry, I don't believe them. So I put 11 days. This is just some marketing information. Bill, you might want to comment on that from your marketing background.
Well, this, you know, this the product has a, you know, a positive marketing position, you know, during these, as I mentioned earlier, with everything that's going on within the real estate marketplace right now. I think people are looking for alternatives to lower their costs of moving. That's just what they're doing. And if it's marketed properly, it's going to drive new potential tenants to their properties, and obviously bring in you know, creditworthy and good a bigger customer base. And
Yeah, I just read someplace reasonable that, or someplace recently, that the average United States person has less than $1,000 in their savings. And if they want to move, and you know, with the way rents are, and I just saw recently the average rent nationwide from Tallahassee to Wichita to Los Angeles is $1,883. That's averaged across the U.S. And you know, so a lot of people don't have $6,000 to move into a new place, and this helps. This will help. And like I mentioned before, if you have a recent graduate like Dave's daughter that graduated and moves out of state, you know, if they're on their own, and if they are, you know, doing this without their parents' help, there's not a whole lot of young people that have that kind of money to lay out as a security deposit. And Dave also mentioned student housing is a big deal. And you know, you see more and more universities across the country that their campus is full. They can't build any more dorms, so you have independent companies coming in building these. I call them a fourplex. I think they're called something else, but where you can put, you know, there's 4 bedrooms and a common kitchen, living room, a couple of Jack and Jill baths. So if you can get into any kind of student housing scenario, even if you go directly to the university and market it that way, remember, you're now getting 4 for 1s because you have 4 students moving into a quad. So there'll be 4 times the deposit, 4 times premium, 4 times the commission. They said our insurance company is domiciled in Jacksonville. They are A-rated. I actually think they're A- rated, but they're still A-rated. And the admitted company is backed by the guarantee funds, and I like the way marketing people say real insurance, not a surety bond. You can compare a surety bond to like a line of credit, because if you default, somebody's going to pay. Somebody's going to be chasing you, and we don't do that. I think that's it. I think that's our last slide, right, Autumn?
I think it is.
That's it.
Yes.
So the product is simple. We are so excited to be involved with FAIA and with IMS. And we think that this can make a real difference in the lives of people. It can simplify operations for the property owner. And it's an easy way to make a nice amount of commission if you come across a big one. You guys have any questions?
If you all think of any questions or thoughts, please, forward them to me, dburt@fai.com. I'll be happy to forward those on to both Tim and Bill. These two guys have been great partners to this point, and I expect this program to grow. We are excited about it. I think we're going to kick it off in Florida. I know that one of our other partners on the IMS platform, North Carolina, is in position to now start to introduce this to their clients. Actually, they may be doing. Tim, are they doing it now? Tim and Bill, or is North Carolina up yet?
It's about 2 weeks.
2 weeks. Okay.
We're going to be doing a webinar with them, I think, the first week of May. But they've been interested in this since I joined IANC, and they love the concept. And that's why they brought it to you, to be honest.
Absolutely. Yeah, that's what got us excited, is that we think a lot of our partners out in North Carolina, and I think they see the same vision that we see, and it is what you see. I think everyone on this call probably understands, again, using my daughter as an example, expenses are high when you're trying to get into not even we're not talking fancy, folks. We're talking something really simple right now. And it kind of hits on, Tim, what you said about the average rental price across the country. We're right there. It's $1,800. That adds up. That's a lot of money out of your pocket coming out for a kid who's just starting a new occupation in a new city, not even sure she's going to be there a year. So again, this protects not only the renter, it protects the landlords and the property owners. So we are excited about it. FAI, FMS, IMS, very excited. Again, if there are questions that you all have that you think of, please don't hesitate to contact us. We appreciate you all jumping on today to listen to the presentation. And again, this webinar was taped. If you want to go back and listen to it and have questions after you listen to it, feel free to give me a call. Tim, Bill, thank you all very much.
Thank you, guys.
Appreciate your time today.
Okay. Thank you all.